Hello, Maverick traders, and welcome out to your weekly currency room. This is Ankit here, and as always, we'll be breaking down this week's price action and most importantly, talk about our upcoming week ahead. Let's get into it. And as always, we'll be taking a look at broader market analysis, then bring it down to our currency baskets, and then take a look at some possible setups ahead. Let's get into it.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at the markets, again, the last 2 weeks has been great, both in the equities and the currencies and everywhere. This week was a bit of a slowdown week, especially in the currency market. Now, taking a look at the equities, we are continuing to bounce back higher. We are getting close to the prior resistance. And at the same time, the volatility just continues to fall. So the equity market had a bit of a recovery, but outside of that, the dollar and the range and the bond yields were just range bound. So again, not a whole lot of price action there. Gold market again rallying higher after pulling it back last week. Now the crypto market remains weak and the trend remains bearish across the board. So there's no real signs of optimism in the crypto markets. Now taking a look at last week events, let's take a look at what's the highlight here. It was a quiet week. We didn't have a whole lot of news events. And again, that probably be why the markets were not as active in the currencies. Lately, we're definitely getting a lot of movement when we have news events on the docket. So that's a clear indication that that's where you want to be active when you have a lot of news events on the docket, especially the pressing ones that are relative to current market conditions. Now, we had the RBA, no change as expected, but there was not a whole lot of movement after that. We had the Bank of England, no change, not a whole lot of movement right after that as well. So two central banks, it seems like with the central banks are just kind of in this gridlock here, no real movement, no real guidance. We just have to really wait and see approach. Now we had the employment report out of Canada today. That was much stronger than expected, 90.4 thousand job gains versus 20.9 and drop in unemployment rate. So again, putting a little bit more optimism on the Canadian economy. So that's really pretty much it as far as the last week goes. Now let's take a look at the last week review and kind of go over the numbers and see how market performed. Now looking at the numbers, S&P had the best performance, 1.8%, and we had the World Stock Index up 1.53% as well. Now the crypto market remains weak, negative 6%. The gold market bounced back very nicely, 2.9%. And so is the oil market, 0.58%. So decent number in the equities. But now when we take a look at the currency market, you can see that it was just a quiet week and there was only one big player. That was the yen. And yen, again, we had a massive movement in the last 2 weeks in the yen. I think this marked the third week where we had a big fall, a big rally, and we're just kind of falling back right again. So any currency that you pick against the yen, probably be the best, probably the only currency, trade that would have been done really well. Outside of that, you can see things were just not moving, not diverging as much. And that's why you can see there's not a whole lot to extrapolate from this week's movement. Now, looking at the crypto markets, again, we're seeing bearishness across the board. Litecoin is the only one that stands up, but take a look at Bitcoin Cash, Ethereum, Bitcoin itself, again, really weak price action across the board. So not much to really extrapolate from that, other than that the trend remains bearish. Now let's do our market analysis and see where we are in the score. And as you can see that the markets are at a +2. Now, if you take a look at the chart, like I said, either you can say that it's either +2 or you can say, well, I won't be turning +2 until we break out above this resistance. As you can see that the moving average is kind of going sideways. So this could be just a big range about price action. So I won't be putting all my chips on a breakout here. I always want to get breakout confirmation. But at this point, you can see we had a very good recovery getting from this point on to the top end of the range here. I want to avoid a range bound condition, and we'll see if this breaks out of it or not. If it stays within that range, then we just probably go sideways for a little bit here. Now, looking at the bond yields, and remember, bond yields have been a strong driving factor, especially for the USD. As you can see, that the bond yields just didn't go anywhere all week; it was just sideways. Had a nice fall after the employment report from the US, and it just went sideways. So really, things are kind of holding steady, and I think it's holding steady for a good reason, because next week we have the US inflation data. And that data is just going to drive this lower or higher. And that's exactly how things have been moving. The data is just really what's driving some of the movement in the bond yields and in the equity markets and in the currency markets. Now, looking at the crypto, what do you see? We saw a range of price action for pretty much a month now, almost a month. And now we're likely to break lower here. So at this point, this looks more bearish to me than it does look bullish. Now, looking at the next week events, like I said, starting with the most important highlight is really Wednesday. So outside of the Wednesday, we have on Tuesday, we had the employment report out of the UK. And then we have some PPI numbers coming out, some inflation data early on Tuesday. And then the big one, the CPI on a Wednesday. So that Wednesday is the one that's where we're going to find that movement, retail sales number, manufacturing index numbers. That's really what's going to move the markets, and then followed by the Aussie employment report later that evening. Not a whole lot on Thursday. We got some Philly Fed numbers, some industry production number, but I think whatever happens on a Wednesday, it's going to set the tone for the rest of the week. So this is a day you want to mark on your calendar as the day to be active, or perhaps starting Tuesday when we get the PPI. But remember, this is the headline. That's Wednesday. And looking at this week's outlook, again, market likely to move off that inflation report. Remember, we are up against a resistance level. So this is where we're going to either attempt to break out or pull back. And that could really change the market sentiment. Now, nothing out of the central banks, but then we have a lot of economic reports. We have the US CPI, a lot of the US data on Wednesday, Tuesday, and Thursday, as we discussed. So those are the days we really want to be active, and we want to be staying on the sideline, especially ahead of this big report. You want to strike when the iron is hot, and that's just really where we're going to be next week. Now, looking at our currency analysis here, let's just jump into the charts and see what the technicals are telling us. And let's just start with the crypto markets. And starting with the crypto markets, it kind of look very similar across the board. It's a -2 on the trend and a -2 on the velocity. Price action just looking weak across the board. This is Bitcoin Cash, Ethereum. They're all kind of looking the same. The only thing that's kind of holding steady here is the Litecoin. But again, overall, the trend, the charts, it looks bearish. Now, let's get into the currency charts here and see what the currencies is telling us. Now, let's just start with the dollar. And this is where we're going to focus on, because we have the US data coming out next week. And right now, USD at a crossroad. It's below the 20 and it's above the 50. So this is not the most bullish, the price action. It's not the most bearish price action. We're kind of neutral here. So at this point, I think I'll be looking for a breakout. Breakout either way. If we break down further below this level, that's really where we're going to look for bearishness. If we can get above this, we're going to be looking for bullishness. I think it's pretty simple going into next week. We arranged one for now. We're going to break out one with the other, and that's what we're going to strike. But right now, as you can see, things are just going sideways. So it's not a whole lot of velocity, and the trends is just range bound. Now, looking at the yen, again, this is the only currency that was the best one this week. Like I said, velocity -3. It just, look at the low bases here, another low base forming here. So price action looks weak. We had a massive drop here. We got the intervention. And we got back up to the resistance, and here we are falling again. So at this point, where do you think the yen is heading? It looks like the yen is heading lower than higher. And I always talk about the candle close, and you can see that the way we are close to this candle is pretty much at the lows of the week, lows of the days. That's not the sign of reversal. So I think at this point, it's likely to continue falling down back to the prior support area. That's what the chart is telling us. Now, looking at the other currencies, and again, realize that some currencies were trending and they're no longer trending. Swiss franc is one of them. Take a look at it. It was a good moving currency for February and March, and you can see things are just kind of going sideways here. So until it really breaks lower, I want to be holding off on my Swiss franc shorts. I don't really love the Swiss franc long here. I'd rather be on the short side. But right now, based on the chart, I'm not jumping the gun here because things are going sideways and we don't know how long things go sideways for. We want to be in there when things are moving and there's a direction in place. Now, looking at the euro, well, take a look at the moving averages. And I want to just give it a trend of a 0. We are about the 20 to 50, but just take a look at the moving averages. It's not really trending higher or lower. So sideways price action here. And again, whenever you see a sideways price action, what does that mean? It could be one day bullish, it could be one day bearish. And that's exactly how you want to treat it. You know, you can't just jump on a multi-day trades on those ones. You just have to be right in the middle and have those trades that could last for a day or two, but no longer than that. Now, same thing goes with the pound. Guess what's happening in the pound? Sideways. Similar thing. We had a massive move here, and a massive move here. So 1, 2, 3. Now this week, just sideways. So going into next week, whichever direction it moves, that's really we're going to strike. But realize that trend again is a 0, meaning that one day strong, one day weak. That's what we're expecting in this price action here. Now the Canadian dollar, it kind of gives us back to the range here. We were looking a lot weak, but then with the stronger employment report, I think we just probably go sideways here. Now, looking at the trending currencies, the Aussie and the Kiwi, they're still trending higher. They're just taking a pause in the short term. So that's really where we are at. Steering by +2 on the Aussie and a +2 on the Kiwi. So we're just taking a little pause here. Any pullbacks, any bases, that's what we were going to use to get long off of. But for now, I just want to stay on the sideline till I can really find what is moving. The yen is the one that's a -2, and Aussie and Kiwi is the one that's a +2. So Aussie yen, Kiwi yen, those are the only currency pairs that are really worth looking at. They're moving, but you can see that everything else is just kind of right in the middle there. And as far as the velocity goes, you know, we only have the yen as a -3, but outside of that, everything is between a -1 to a +1. Remember, we want to be outside of this little window here. We want to be a -2 and -3 or +2 and a +3. But that's not really what we have right now. So this week goes as a quiet week. And it's really important to know how to trade that. When things go sideways, this is where you should be trading less than more. We had a great 2 weeks, last 2 weeks. This is just one of those weeks where things are consolidating before it can really go higher or lower. Now, let's just jump into our possible trades ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Now, looking at the possible trades, let's just jump right into the currency pairs that we just looked at, Kiwi yen and the Aussie yen. And I'll be highlighting, let's say, a daily chart to a 4-hour chart. And you can see that on a daily chart, the trend is very nicely moving higher. We are right back at the resistance here. And the way we're closing, it's not really closing with any signs of concern. So this is likely to continue higher. Now, if I go on a 4-hour chart, what do you see? Some basic pattern here. So that's exactly what we want to do. We want to look for some basic patterns and break out of those basic patterns is really where the opportunity is. Now, same thing goes with the Kiwi yen. You know, it's moving up, making high base, then it moves up, and then it go high base. So looking for a high base breakout off of this resistance level. Again, that's something I'll be looking at in the early part of the week. But when we go into Wednesday, is the dollar and the yen, and then taking a look at dollar currency basket itself, this is what we'll be focusing on. So if the dollar weakens, then we're just going to continue looking at dollar weakness across the board. If the dollar is not the weakest, and I think then the focus will go back on the yen, along with some of the dollar crosses. So looking at those two, Like I said, Aussie yen and Kiwi yen is two that I'm really watching right now. But outside of that, perhaps I can take a look at currency pair like dollar CAD, see what kind of movement that dollar CAD had. You can see that dollar CAD is just kind of trading right sideways in the range bound condition here. So nothing too exciting. The only time I would like a dollar CAD bearish trade is if it breaks below that 136.40 area. But until then, it's just a range bound price action. That's exactly what the daily chart is telling us too. That's where the 50-day moving average is. So we got some support right in place there. Outside of that, if I go into all the other dollar crosses, they will kind of look similar. They're just kind of stuck in this little range here, not really clearing out a significant level. We got the Aussie dollar here, 66.50. I don't want to be bullish on this if it breaks above that. And same thing with the Kiwi dollar as well. So really, it brings us back to some of these yen pairs. And I think that's really what's going to be moving. Outside of that, again, all eyes going to be on the inflation data. That's really where we want to be active. We want to be active on that Wednesday. And again, depending on where the dollar goes, up or down, I'll be picking a direction. But until then, stay on the sideline. When things go sideways, we should pull back. When things go hot, that's where we're going to strike more. And it's really a balancing act as you're trying to trade on a week-to-week basis. Not every week is going to be a great week, but it's really important to know when things go quiet, you need to slow down as well. So, and keep preserving your capital, because when the next opportunity comes, you are there to take advantage of it. So that's really what the game plan is for next week. Till then, you have a good weekend ahead, and we'll see you all next week. Cheers, everyone. Happy weekend. Cheers.